Jordan Belfort made $49 million in 3 months, selling absolutely nothing of value to people who trusted him. That's not the shocking part. The shocking part is how stupidly simple the whole thing was.
And here's the thing. People will buy garbage if you sound confident enough.
So Belfort starts dialing. He refines a script. He hires friends from his neighborhood, guys who have no finance background, no college degrees, just hunger and good voices. He teaches them the script. And it works. They're making thousands of dollars a week selling stocks that are essentially worthless. In 1989, he opens his own firm, Stratton Oakmont. And this is where the scam really begins. Let's explain how penny stocks actually work, because this is the entire con. Imagine you start a company. You call it Super Amazing Tech Inc. You don't have a product, you don't have revenue, but you file some paperwork, print some stock certificates, and now Super Amazing Tech is technically a publicly traded company. Your shares are worth 10 cents each. Now, nobody knows about your company. Nobody cares. The stock just sits there. But then you meet someone like Jordan Belfort. Belfort buys millions of shares directly from you for pennies. Let's say he buys 10 million shares at 10 cents each. He just spent $1 million. Then his team of brokers starts calling every retiree, every dentist, every middle-class investor in America, telling them Super Amazing Tech is about to explode. They use urgency. They use fake insider information. They make it sound like if you don't buy today, you'll miss the opportunity of a lifetime. And people buy. You've seen the movie. The drugs, the yacht, the dwarf tossing, but nobody actually explains what Belfort did. Not really. Because once you understand the mechanism, you realize it's still happening right now, just with better lawyers and different stock symbols. The stock goes from 10 cents to $1, then $2, then $5. It looks like it's working. Early investors see their accounts double, triple. They tell their friends. More people buy. But here's what's actually happening. Belfort is selling his shares the entire way up. He bought at 10 cents. He's selling at $5. That's a 5,000% profit. He turns his 1 million into 50 million. Then, when he's out, the buying stops. There's no more hype, no more cold calls. The stock collapses back to nothing. Everyone who bought loses everything. This is called pump and dump, and it's extremely illegal. But Belfort didn't do it once. He did it over and over and over again, with dozens of companies, for years. Stratton Oakmont became a machine. At its peak, the firm employed over 1,000 people. The office was exactly like the movie. Brokers screaming into phones, cash everywhere, prostitutes in the break room, drugs on every desk. Belfort encouraged it. He wanted chaos. He wanted aggression. He hired ex-athletes, bouncers, drug dealers, anyone who could handle rejection and sell with conviction. He paid them massive commissions. A good broker could make $1 million a year. The top guys made more. Belfort himself was pulling in tens of millions annually. And the victims? Retirees who lost their savings, teachers, firefighters, people who believed the voice on the end of the phone when it said, "This is a sure thing." Stratton Oakmont stole an estimated $200 million from investors. But even that number is probably low because most victims never reported it. They were embarrassed. They thought they'd made a bad investment, not that they'd been scammed.
So let's break down exactly how one man in his 20s turned cold calls into a criminal empire and why the system he exploited is still wide open.
Belfort wasn't some genius. The pump and dump scheme is old. It's been illegal since the 1930s. The SEC knew about it, the FBI knew about it. But Belfort understood something crucial. If you move fast, stay loud, and bury regulators in paperwork, you can run the scam for years before anyone stops you. Stratton Oakmont was investigated multiple times. They were fined, they were sued, but Belfort just paid the fines and kept going because the money coming in was so much bigger than the penalties going out. In 1996, the NASD formally expelled Stratton Oakmont from the securities industry. The firm was banned, but Belfort had already made his fortune. He'd already bought the yacht, the helicopter, the mansion in Long Island.
And he didn't stop. He just shifted tactics.
The FBI finally got him, but not for stock fraud. They got him for money laundering. See, Belfort had a problem. He'd made all this illegal money, but he couldn't just keep it in a US bank account. That would raise red flags. So he started smuggling cash to Switzerland. He'd give suitcases of cash to couriers, often his own employees, who'd fly to Geneva and deposit it in secret accounts. One of those couriers got caught, then another. The FBI started connecting dots. They flipped his partner. They wiretapped his phones. They built a case. In 1998, Jordan Belfort was arrested. Here's what you need to understand first. Belfort didn't start as a criminal. He started as a failure. He cooperated. He gave up dozens of people. He testified against his own brokers, his accountants, his money launderers. In exchange, he got 22 months in federal prison. 22 months for stealing $200 million and destroying thousands of lives. He served his time in a minimum security facility. He played tennis. He taught other inmates how to sell. When he got out, he wrote a book. Then Hollywood made him famous all over again. Now, here's the question nobody asks. Did it stop? Pump and dump schemes didn't disappear when Belfort went to prison. They evolved.
In the 2000s, it moved to email spam. In the 2010s, it moved to social media. Today, it's crypto, it's NFTs, it's influencers with millions of followers telling you to buy a coin they're already holding, then selling the second you do.
The names change, the technology changes, but the structure is identical. Find something worthless, hype it up, sell it to people who trust you. Get out before it crashes. Belfort proved something important. If you're charismatic enough, if you're shameless enough, you can sell anything to anyone. And the penalties for getting caught are a rounding error compared to the profits. There's a scene in the movie where Belfort is giving a speech to his brokers. He's screaming about how they deserve this money, how they're smarter than everyone else, how the system is rigged anyway, so why not rig it in your favor? 1987. He's 25 years old. He's selling meat and seafood door to door on Long Island, and he's going bankrupt. The business collapses. He owes money. He's got no clear path forward. Then a friend tells him stockbrokers make serious money. So he walks into L.F. Rothschild, a legitimate Wall Street firm, gets hired, and on his very first day, Black Monday happens. And the brokers go insane. They're cheering. They're banging on desks. They believe him. That scene is based on a real event. And what's disturbing isn't that Belfort said it. It's that his argument kind of makes sense if you don't think about the actual human beings on the other end of the phone. Because the stock market is rigged in a lot of ways. Insiders do have advantages. The wealthy do manipulate systems to stay wealthy. But Belfort didn't expose that. He just became another parasite feeding on it. So here's what we're left with. Jordan Belfort served less than 2 years in prison. He paid back a fraction of what he stole, about $11 million out of the $100 million he was ordered to repay. The rest? He claims he's broke, even though he's been paid millions for the book and movie rights, plus speaking fees, where he charges up to $100,000 to tell corporate audiences how to sell like he did. The victims? Most of them never got their money back. Some lost everything and never recovered. And the system? Still wide open. The SEC is underfunded. Enforcement is slow. Penalties are weak. And every year, new Jordan Belforts figure out new ways to package the same con. You want to know the real lesson of The Wolf of Wall Street? October 19th, 1987. The stock market drops 22% in a single session. Biggest one-day crash in history. The firm fires him. He's out before he even starts. It's not that crime doesn't pay. It's that if you steal enough money fast enough, you can buy your way into a different ending. You can rebrand. You can become a motivational speaker. You can sell your story to Hollywood and let Leonardo DiCaprio make you look cool. The scam didn't end when Belfort got caught. The scam was convincing everyone it was just a movie. Now, most people would take that as a sign. Jordan Belfort took it as a lesson. The stock market is chaos, and chaos creates opportunity. He gets a new job at a small brokerage in Long Island. This is where it clicks for him. He's making cold calls, selling penny stocks, tiny companies you've never heard of trading for under $5 a share, and he notices something. The commission on blue chip stocks, your Coca-Colas, your IBMs, is tiny, maybe 1 or 2%. But on penny stocks, the commission can be 50% or more. You sell $1,000 of some garbage company, you keep $500.